be careful what you're paying for your investments. Don't pay the high amount of 20, 25, sometimes even higher times earnings, because when times like this happens, which we said back in November, December, this is going to happen. It is here. Oh my gosh, how can it drop so much? It's because the valuations are so high that any bad news causes them to fall dramatically. I mean, Nasdaq down, 10, 12% over the last 2 days.
You're priced for perfection, and right now we are not in a perfect environment is the problem. And we'll talk about here the numbers of now what this trade imbalance looks like and what the U.S.'s plan is. The U.S. is going to be implementing a base rate for tariffs of 10% on all countries, and that goes into effect on April 5th. But what they also did is, after research into trade practices from other countries, this included tariffs, currency manipulation, and then trade barriers. The U.S. will also be implementing higher duties on several countries. The big one, the big problem, I'm going to say, is China. And the additional 34% tariff on China will occur, and that comes on top of previous tariffs, which were around 20%, for a new effective rate of 54%. So that's going to be very, very high for China.
And then China obviously came back and okay, well, you're going to do that to us? Now, they had, was that 37%? I think was
34. So we did 34, they're doing 34.
Okay, so you did
Well, we were reciprocating their tariff, now they're reciprocating our tariff, and it's like, wait, you guys are already way ahead of us.
Right, so we're trying to play catch up, and then you tack on more on that. And the reason why this is so important is that because now, and I kind of wonder about this. I often wonder if it's some political, because our country has become so divided. Yeah. I'm concerned that some political economists that are more Democrats and Republicans are going, we're going to have inflation and going to slow the economy and this is going to be terrible. You have others saying, and this is what we believe, that this is going to last a few months and the administration is going to stay strong. They're not going to back down right away, but they're going to slowly start saying, you know what, our economy is suffering. We need to call the United States and say, hey, can we talk about this? And I think you said already Vietnam opened up a conversation.
Yeah, it was Vietnam, and I think I just saw here as well, Cambodia as well expressed willingness to negotiate on these tariffs. And what I look at with China in particular, I think China, they're not stupid. They're I'm going to say very tactical when it comes to playing this game. And what I was reading, and I think it'd be kind of smart, is they did this reciprocal tariff to our reciprocal tariff of that 34%.
That sounds so strange.
I know. To pressure the stock market. Right. Because you pressure the stock market, now you start having people come out and, oh my gosh, maybe we shouldn't have done these tariffs. So it's almost like they know that putting a 34% tariff on us is, I don't think, fair, and I think it doesn't help them, but I think they're playing this game to, again, cause that divide that you talked about, to get people to kind of push ahead and reduce those tariffs rather than dealing directly with the administration.
And I want to remind people, China's economy is not as strong as ours. They have a major problem there with real estate. This is going to hurt them a lot more than us. I do think China will hang tough for a while, but eventually they're going to have to cave because, and we're going to talk about the jobs report. Yeah. I mean, we've got still a very strong economy. We can weather the storm. I know the mainstream media is going to say, oh, this and that, but underlying, we're doing okay and we will do okay, and we can hold strong. As President Trump says, we hold the cards.
Yeah, and the thing, too, with these reciprocal tariffs, the big thing is they are reciprocal. Yeah. So I'm not necessarily going to say that I completely agree with their formula and how they did it, because it didn't include just
tariffs. No one understands that formula, I don't think.
They don't understand it, and there's currency manipulation, some other factors that were involved. But, I mean, the administration's calculated tariff rate from China was 67%. Yeah. And that was before the 34% that China put on us. So, I mean, that puts us over 100% on the tariffs, according to the administration's calculation. I think it was a little bit excessive in terms of their calculated rate, but there is still no denying that China already had tariffs on us, even as a flat tariff rate.
Right.
And I think that going through this difficult period, it's going to be very interesting to see how it plays out. We heard from China, EU. We've heard tough talk from France and Germany, but no real action yet, because their calculated rate is about 39% on our goods. We imposed a 20% tariff. So what are they going to do to combat that? I mean, there's a whole list of countries. I mean, we just talked about two, and the EU is actually multiple countries. It's a block of countries, essentially. Right. But this is a sample compared to the more than 180 countries and territories that are facing these reciprocal tariffs. Talk about Vietnam and Cambodia that are coming to the table. I mean, President Trump's phone has to be blowing up right now with other countries that he's kind of dealing with.
I don't know if blowing up yet, but I think there is some concern there. And am curious, wondering, is next week, Monday, Tuesday, is he come back with China like, okay, you put on, what was that, 34%? We'll put on another 34%. You want to play that game? We'll play that game all day long. Because what does he have to lose at this point in time? And I think eventually China's going to realize they have to back down. And I will say, before we go on, because I do want to talk about, people think, oh, this is all new. No. Tariffs have been around for a long time. But the short-term positive that I see is that the 10-year Treasury did fall under 4%. So what does that mean? Oh, wait a minute. Mortgage rates will be coming down. Loan rates will be coming down. So that is an important part to remember, that there are a few benefits. And also, too, the dollar went down, makes our exports less expensive. So there's some positives here that is going to come out of this. And I think part of it was kind of formulated. But it doesn't happen a day or two. And that's why people can't panic with investing if you got good quality equities.
And one last thing to add to that, trade deficit for China in 2024, $295 billion. So we put 34% on them, they put 34% on us. It still hurts them more because they export more to us. The tariffs are going to damage their economy more than it damages our economy because, as you said, they are an export-driven nation where we are not an export-driven nation. We are a large importer. The tariffs that these new countries are putting on us don't hurt us as much as our tariffs that we put on their goods.
And actually, Chase, this is happening worldwide. Going back to the 1930s when they had the Smoot-Hawley Tariff Act in place, protectionism is actually coming up because what's happening is that all countries they're starting to raise it. It's going to really hurt, trade worldwide. But back in the 30s, the tariff rate in the U.S. was nearly 30% today, and it's going to be higher than this, but it's 8.4%, but it's still 30%. We could get to that level. And actually back then, we were collecting a lot of revenue. And don't forget about these countries that are putting tariffs on us. That's revenue for them as well. So it's, everybody's like, oh, the United States is being so tough. Well, yeah, let's have fair trade for a change.